Once again, the direction of our market has been dictated by events overseas, with the spotlight this week firmly on Europe. But for the Australian dollar, the focus has been domestic. It's back above parity, given new life by improving consumer and business confidence, as well as falling jobless numbers. But Alan Kohler, the host of Inside Business, doesn't think a rate cut next month is under threat.
Well, look, the market is still predicting, the futures market is still predicting a rate cut. In fact, a couple of them over the next 6 months. I think that's more likely still than not. Inflation is not really a problem, and what the Reserve Bank's looking at is not so much local data, but what's going on around the world. There'd need to be a very, big rise in the Australian economy to offset the risks and dangers that are occurring in Europe and America at the moment. So I think that basically the Reserve Bank will probably still take out an insurance policy, which is a rate cut just in case.
Are things looking any less precarious now in Europe, given that all 17 Eurozone countries have ratified this latest bailout package?
Yeah, look, things turned around on the markets when Nicolas Sarkozy, the French president, and the German Chancellor Angela Merkel said that they would recapitalise the banks, and so that's now grinding its way through. They're still getting votes on it. As you say, the European countries are voting in favour of it. They still haven't actually announced what it is they're going to do, but there's still a lot of optimism among investors and markets that it will turn out for the best now in Europe. Look, it's still pretty short term. I mean, what the problems they have in Europe and in America and everywhere else with debt are long-term, difficult, but every little step helps, I guess.
What about this latest IMF report that's warning Australia that it won't weather another global financial crisis as well as it did the last one if it were to happen? In fact, we'd be pushed into recession.
Well, remember that we weathered the last one through a massive stimulus package and a big cut in interest rates and a guarantee of bank deposits. So the banks were protected. Huge amount of cash was pumped into the economy by both the government and the Reserve Bank. Well, the government's out of money. It's got a big deficit now, $47.7 billion in the last financial year. There's no way that they can repeat that dose with fiscal stimulus. The Reserve Bank can cut rates. That's the best thing. And the other thing is that the Australian dollar can fall, which it would do. So look, I mean, I don't know that we'd be in as much trouble as other countries would be if there was a global recession, but we certainly wouldn't escape it to the extent we did last time.
And finally, Alan, what's coming up on Inside Business?
We've got an interview with David Thodey, the head of Telstra, ahead of next Tuesday's vote by Telstra shareholders on their deal with the NBN, and also an interview with Ahmed Fahua, the Managing Director of Australia Post.
Alan, thank you very much.
Thank you.